Let's bring on board Richard Harris and dissect what's happening globally with him. Richard, hi, morning. I guess the big news this morning is OPEC Plus and the fact that they finally managed to finalize a deal after much back and forth.
Yes, I think it's very big news, much bigger, I think, than people really take it for. We had a situation where oil January was at 70 or something like that. It 20, we're now back into the 30s, I think is more healthy, partly because these companies need much higher prices. And it's been quite important, I think, to have this particular negotiation go on, especially this time.
Right. Richard, so how do you sense that markets are going to absorb this? Asia is the first to kickstart. Asia started off, pretty comfortably in the green. But it seems like this is a decisive mandate and could very well turn the tide for oil prices from here onwards. Are we looking at, some of the money flow towards oil assets, or do you think that, the world as such is in cash conservation mode, and you're not really going to see a rush for oil at this juncture?
I think the second one is right. What one is the oil price situation where really extremely low, it's a critical situation. I think we've now to maybe level the market is more comfortable, where it's more in terms of supply and demand, a little bit more demand out of, but very much left out of Western Europe. And it's going to take some time for that to go around. So the oil price should be low. It is low, but it couldn't stay at the catastrophically low levels it was recently.
Richard, just wanted to understand what's happening with the equity landscape as well, because, the fact that even markets like India have recovered a good 21% from their earlier March lows. You've got the US markets just last week posting its best weekly gain since about, 1970s. Is it safe to say that the worst is behind us, or do you think this is at best just, a bear market rally?
Seen with the rally is the response to the measures that authorities are taking. They've taken significant responses. We're looking at like $5 trillion going into the markets from various countries around, maybe even more. So that's an enormous. But I think that likely to see is markets now to look at earnings, at the economy, unemployment, and those cues are very, very important. So I expect to think back to levels where we propose.
Right. Richard, good to have you on the show. Thanks so much for taking the time out with your perspective.